Hi, Dave Johnston here with Day Trade the Markets. I just want to do a quick video here of a crude trade that we were able to make today. Just want to give you just a really quick background on how the trade was executed and why it was. So this is a daily chart here, and you can see that we had a lot of sideways motion through here, actually going back through December, and then we had a nice break in this time period here, early March. It came all the way down in the 48, just dipped below 48. But this is the interesting thing. We'd had a nice rally up to where this market broke lower, and we reached that last week when we got up back up here up into the 54 area. And when the market did rally up like that, as you can see, it also formed a buying gap. So you can see this gap in the market right here from these 2 days, and I just want to switch over now to a market profile because I went ahead and just identified this with a little bit more detail. You can see the gap right here I put in this blue rectangle. So this is where the market gapped up, and the 54 area is right in here, which is where the market got to here back on the 12th. So what was that, last Thursday? So obviously, quite a bit of sideways motion here after this market gapped higher and tested 54. Yesterday we came down and we erased that gap. We had a low right here, and then it closed inside the gap. Today we opened inside the gap and we probed a little bit above it, and then we broke lower. And the reason I put this arrow down here showing yesterday's low is, in my mind, when that market broke through there, that was high confirmation of very bearish control within the daytime frame. And this market not only was breaking from a known area of resistance, but was also breaking through an area where it had tried to hold as far as support, testing up into that known area of substantial resistance. So substantial resistance is the 54 area up in there. So I'm just going to flip on over here to the chart. So here's the 2-minute chart of the day utilizing Day Trade the Market software. So you can see here that, by the way, I'm just going to go ahead and, whoops, I'll just lower this down a little bit. You can see here, I'll just bring in the, because I'm still got my trade on here for these 4 contracts. So you can see this magenta bar on the low of the day. If you look over in the data box on the left, you can see the highs at 50.70. Well, I've now got my stop at 50.75, so 5 ticks above the high of that magenta bar. I've also manually placed on all of these blue horizontal lines. I've identified those as likely areas of resistance because you can see that they're the top of these little rectangular black areas that we call high velocity moves, which are natural areas of resistance inside the down auction. So none of them really got tested here, except this one did a little bit, which was after we had gotten short. So we may get stopped in here. Our stop's at 50.75, and I should make also a notation here. I'll just go ahead and copy one of these guys. This is where we're actually short, and then I'll go ahead and I'll make a copy of that one too down here at our stop price right there. There we go. We'll just maybe make that sort of a red kind of color so we know where our stop is at 75. So I think all I really wanted to point out on this trade was, okay, it worked out great. We're up over $6,000 on a 4-contract trade, on a day trade. But I think the thing that's really fascinating about this trade is that even though it's a day trade and we're able to make a good profit within the day time frame, it was really set up taking a look at the dailies, the daily charts, and then the market profiles, and realizing how the auction really operates as far as what mode were we in. Were we really, because when the market came up and tested back into the 54 area, that was a test of the known area where the market had broken lower about a month or so ago, 6 weeks ago. And so that's a natural area of significant resistance. So as long as the market can remain below that, we're still in a bearish intraday auction in our view. So when the market rallied up to that point with a gap, a buying gap, and then that buying gap was erased yesterday, and the low of that buying gap was taken out today, that was really our sign, at least how we look at the markets, that we really got to get on board this and try and hold this trade for as long as we possibly can today, because it's going to it'll be controlled by sellers. It has proven to us structurally that the market is controlled by sellers. We want to try and get on board and hold the trade for as long as we can. So in some cases, traders would put on their maximum position size. Well, I put on 4 contracts here. That's not exactly my maximum position size, but I wanted to do this just to show that there can be some really good money made, even with a relatively small position size like 4 contracts. So, and the other thing too is that your risk on a trade like this is so minimal, because when I got into this trade, I was able to go ahead and put my initial buy stop, protective stop, only about 8 ticks or so above where I entered the trade. And when you can do something like that, then you're really managing your risk. And okay, we just got filled there. So out of the trade at 75, we were long, we were short at 52.20, and we're out of the trade at 50.75. So that's 145 ticks. So 145, that's $1,450 per contract times 4. So what? Just a little bit under $6,000 on that day trade. So this is obviously one of our better trades, because we don't always get a setup like this where we have seen where the market has rallied up to or dropped down to a known area of where the most recent significant intraday auction started from. And we had that opportunity today in the crude market, and things just really worked out well. So I don't want to give you the idea that every day we're making trades like this. We're not. But I think the idea of the trade and why it's set up so well is pretty straightforward, and I don't think it's really difficult for anyone to jump on board trades like this, whether or not you're going to hold it as long as I did or whatever, but certainly to be able to identify these opportunities when they do occur. So if you have any questions or comments, just reach us at info@daytradethemarkets. Thanks for watching, and we'll see you next time.